All right, welcome, guys. I'm going to take a few minutes to just say some very striking things you should draw your mind to, after which we're going to do a back test. That's what I want us to do tonight. Let's do a back test of London pairs. I want to do a back test of London pairs. Maybe next time we'll do back test of New York pairs. All right. So once I want to start, I'll mute everyone. You can just drop your questions in the chat so that we look at them together. Being that as it may, let me say this, that for no reason should anyone give up. Okay? No one should. I've personally dropped some of my my mentors' videos in the group. I still dropped one last week, how to trade the news. It's like many of us do not yet understand how to do these things. So you get caught up, you are trying to wonder, is it that these guys are doing guesswork or something? So we'll just do a few back tests tonight. Let's see how it plays. Then the shotgun, the video on shotgun, how to trade London and New York session that we did during the boot camp is still in the library. You can, get access to it, watch it over and over again. I also dropped some of my mentors' videos, I think within the week. Go through them. Very important. Very important. How to mark up a trade before execution. I dropped that video. I think, was it Thursday or Wednesday? November 1st. Yeah, it's there. It's in this mentorship group. I know many of you are here. You have not watched that video. I'm very sure of that.
I watched it.
But let me leave all that. Let's see. Yeah, it's very lengthy, but there's volume in it. There's a lot of information in it. So, Mr. Gbenga, you're welcome. Welcome, sir. Mommy, you're welcome. Bright Blue FX, welcome. Mr. Emeka, welcome. Yeah, I think I've welcomed everyone that is currently on this call.
Thank you, sir.
You're welcome. Yeah, definitely I'm recording. Okay, I've started recording already. Okay. Okay, I still want to do a back test tonight. Back test tonight. If you're going to be successful in trading, I said I'll say just a few things. The first thing is to get the skill. And by skill, I'm not talking about what your teacher taught you or what your mentor taught you. By skill, I simply mean what your mentor taught you and you have back tested. That's the only thing you can trust. So anytime you hear me talk about skill, I'm not saying what they taught you, what you learned on YouTube or what you learned even in this mentorship team. No, I'm saying what you learned and you have back tested. That's what you can trust. You have tested it and you have seen it played out again and again. Some of you that are very busy, I don't see your charts again. I don't see your markups. I've said it again and again. Whether you are going to take the trade or not, there shouldn't be a week that passes without you marking up a chart and come back days after or hours later to check if it played out. And that's why I intentionally created the chart time, which is every Fridays, okay? To ensure that everybody comes to share their chart and tell us what they looked at for the week. Did it play out? Did it not play out? I just want to know. Okay, this is what I looked at. It played out. It didn't play out. We can find out why it did not play out. We can correct you. That's how you will grow. But I've always been disappointed at our chat time because I don't know how to pretend. I've always been disappointed. We have over 15 persons, 30 persons, 5 we attend chat time. Only 1 person is ready to share his chat. I think that's the highest I can do. That's the highest push I can give to you. I can't break your head and put this thing inside. It is when you share your chat with us, we see where you are missing it, how you make your analysis, how you take your entry. That's when we can correct you. That's when we can tell you, okay, it's fine. Your analysis was right. Price did another thing, you know. We can make our input based on the model we have taught you. So skill in this regard is not what I taught you, it's what you learned either from the videos or from the calls, and you have back tested it and you see how it is being applied. That is what we call skill. Because you will think you know it until you now fund your account. That's when you discover you truly don't know it. The only way you will know that you know it and you are sure that you can trust it is after you have back tested it over and over again. That's one. Then number 2 thing I want to talk about is your risk management. Many of us, we do not practice risk management. We expose so much to the market, like so much. We expose too much. You have $100 account. You are exposing $50 on a single trade. That's not wise. Personally, as I'm here, I don't expose anything more than 5% per trade. 5% of my equity per trade. That's what I expose. So if I have a $100 account, I'm going to be risking $5, $6. I don't think I risk $10 on a $100 account. I don't do that. That's 10%. Come on. That's 10%. I risk $5, $6 on a $100 account. Yes, sir. So trades that are not within that risk appetite, I simply let them go. So you have a $200 account, you are risking $50 on just one trade. And when you get hit twice, $100 is gone. Your emotion and psychology is destroyed. So we need to sit down to practice risk management. What you can lose per time. You don't control the market. I've said this over and over again. And I'm thinking that maybe I should just start making psychology videos, because it's like many of us, we know these things. Our psychology is messed up, so we are not being profitable. Yeah. I'm trying to get a video editor, someone who will be helping me to, anchor my videos, so that some of this, I need to just, but this thing is simple. What you can risk per time, that's what you should expose to a trade. So if I have a $50 account, I shouldn't risk more than $5. I shouldn't try it. I can't try it, sir. No, I won't do it. You get it now? That's how you're able to curtail your risk appetite. You're able to trade within your psychology level. That's the second thing. I've talked about skill, what you were taught and have back tested. And then number 2, I talk about your risk appetite. Number 3, I wanted to speak about psychology, which I've already also mentioned. Your psychology should not be messed up if you are doing the same thing over and over again. If you are doing the same thing over and over again, your psychology will not be messed up. Why should my psychology be messed up when I already made up my mind? If this trade goes my way, I should be losing $5. And sorry, if it goes against me, now it went against me and I risked $5. Why should my psychology be messed up? My psychology is going to only be messed up when I've exposed more than I am able to lose to the market. Yes, my psychology will be messed up because I've exposed more than I'm willing to lose, more than what I intend to lose. Psychology is messed up. So you must guard your psychology, practice appropriate risk management, what is appropriate to your account, and then ensure you back test. Is that okay? So let's talk about let's just backtest London pairs. London pairs. First, I want you to change your time zone to the New York session. We used to have -4. If you click on this time towards this area where I am, you will see the time and UTC, the time zone. Click on it, put it on New York. That's -4, -5. It used to be -4. We already have a 1 hour lag. All right, so we now have -5. Now, what this means is that your screen is already on New York, okay? Or you are in Nigeria, you can just change it to Lagos. If you bring it to Lagos, the system will automatically change the timing that you have on your screen. Is that okay? So let me take it back to New York. Now, New York session is 2 a.m. to 5 a.m. New York time. 2 a.m. to 5 a.m. I want you to write, which is equivalent to around 7 a.m. in the morning, Nigerian time, to 10 a.m. And currently, it's around 8 a.m. to 11 a.m. Nigerian time. So our New York session, we have 2 a.m. to 5 a.m. or 8 a.m. Nigerian time to 11 a.m. Nigerian time. And GBP is a London pair. Let me say that again. GBP is a London pair, which means that any pair that has GBP as the base currency, we have quote currency, we have base currency. Base currency, if you come up here, you will see GBPUSD. The GBP comes first, that's the base currency. The USD comes second, that's the quote currency. So since GBP is a London pair, it means that any pair that has GBP in front of it will move more during the London session. Let me repeat that again. GBP is a London pair. So any pair that has GBP in front of it, like GBP NZD, GBP JPY, GBP AUD, GBP CAD, GBP Swiss, GBP CHF. Okay? Once you click on your you click on the symbol search, just click on GBP. You see all the assets that have GBP in front. GBP, CAD, GBP, USD, GBP, all of them, they are all London pairs. And what that means is that you are going to be having more of the volatility within that London session. The volatility will be more, will be higher. Look at them. Just put GBP. You see all the pairs having GBP in front as the base currency. Okay? GBP, CHF, JPY, USD, GBP NZD, GBP CAD. Yeah, I know there's GBP AUD, you know. All these pairs will move more during the London session. Please write it down. And when we're talking of volatility, we're simply saying that price will give you a window of opportunity within this session. You are going to find your model within this session. You are going to find what you are looking for, possibly a sweep of liquidity and a break within this session. All right? I'll be doing that later. Okay. So we are going to backtest GBP now, USD. If we have time, maybe we'll backtest one other GBP pair so that we just see how it goes. But let's talk about structure, because we don't do anything outside structure. Okay. Personally, I don't do anything outside structure. If you look at my time frames here, you see this is monthly. This is the monthly chart. As you can see on my screen, if I pitch the screen together or I zoom in, you will see that we have been heavily bearish. This is it. GBP is coming from this angle. Lower high, lower low. Price gave us a lower high and created all of this lower low. So monthly, we are bearish. And you remember the principle of accumulation below every lows and distribution above every high. What it means is that if price was bullish, and price gives me this, this already tells me we're bullish because we have this high, we have this low, price give us a higher high. Accumulation and distribution principle states that once a higher high has been taken out, price will distribute, we break structure to come lower for a retest of this zone. And price goes back up. Once this high is taken out, there'll be distribution to come lower. In the same vein, if price is bearish, okay, in the same vein, if price is bearish, price gives you this and establish a much lower low. Price has broken this low. After creating this lower high, give us a lower low. All right. Once price breaks this previous low, there's going to be accumulation. What's the accumulation? A break and retest for price to come back to this zone. Then price will go back here. Immediately price breaks this low, price will give you accumulation. Sometimes price might give you entry, other times price might not give you entry, but all the same, there's accumulation below every low and distribution above every high. Distribution is selling because you are giving out products, you are distributing goods. That's distribution. You are selling. Okay, so price is going to sell, but accumulation, you are buying to store. You are buying to store. That's accumulation. So after every low, price will give you buy entries. So it means that after a high has been taken out, we can look for a sell momentum, and after a low is taken out, you can look for a buy momentum. If you understood what I just explained, just drop a 1-1 in the chat, in the Telegram chat. Let me see, 1-1. So I'll continue. Now we understand that price has been bearish by structure. And where is the next place price should come to? Price took out this low. Yeah, Mr. Becker, I'm saying, okay, fine. Fine, just drop a 1-1 if you understood what I just explained. All right, good. All right. So price took out this major low. Look at the major low. That's the low that was captured. Immediately this low was captured, we are expecting price to buy. And now if price is going to accumulate, it means there's going to be some form of break of structure here. We can buy up. Now, if we're going to buy up, where are we hoping to sell to? This is the next, this is the last push up. Remember how we used to do it. We take the last push up. This was the last push up before the push down. And what we thought was that you take 50% of everything. That's the 50%. Remember that principle, never forget it. So that's the 50%. So we are expecting that price should buy from here to this place before we go lower to take this low. On a normal ground, I'm not going to wait till price get to this zone before I will sell. This is monthly. This might be next year. I don't know. All right? This might be next year. In fact, this is 2032, not even 2023. Before price will come here for me to want to sell down. So I can start looking for buy opportunities here. I'll keep buying. If I get to this zone, I take all my profit and then I push out. Now, if I bring my Fibonacci level from this high to this low, you will see that this area aligned with a premium zone for a sale. So if I'm buying here, I can continue to buy till 50%, take my profit. Or I buy, I hold my buy still, maybe this internal liquidity, there's internal liquidity here. I can take my profit from there. Yes, I can take my profit from here. So you must have all this knowledge at your disposal when you are coming to the market. Okay, so let's go now. Let me remove all of this. I love my chart clean. Okay, so now price took out the major lows. Remember, we're back testing. Before price took the low, price gave us this push. Give us this push, took out this low, bought up, came to mitigate this zone and cleared, taking out this low. So price is going to come here, break all of this, maybe break here before we come back to retest. Maybe just like this. You get. So I'm not predicting what price we do. I'm only trying to trade what price is showing us. Now look at this. Price came and price started being bullish monthly. This month closed bullish. This closed bearish, bullish, bullish, bullish. So from here, I want to start looking for bullish entries. Now, if I go to the weekly, this is that low. This is what price gave us on the weekly. You see all this push. Price came here, gave all of these, and price clearly broke structure here. High, low, higher, high. Price broke lower, sweeping this liquidity and broke higher. So this was a one leg. This was a one move from here. This was a one move. Now price has come for a retest and we are going higher. So we are just going higher to come and take all of this high. You get it? We did all this analysis some times back, and we just have to come back to it again. We did all this analysis some times back. So since we are back testing, this is what we have now. A high. This was the last low created before this high. So price has come for the retest. Now this place price is retesting the same principle. This last push down, measure it. That's the last push down. Then take 50% of it. Put your rectangular box on the 50%, price will come there. You saw how price came back there to the 50%. Now that price came back to the 50%, what do you want to do? You want to go to at least 4 hours, because it's weekly. So weekly, you go to 4 hours. I've taught on time frame analysis. It's in the library. So you want to see price come here and give you a 4 hours break of structure. Look at it. Price came to that zone, and look at what price did. Price gave us this low, pushed up, lower low, and price broke structure. The same thing we have taught over and over again. So this is a fast break of structure. Now you have a fast break of structure. What are you looking for? You want to look for anything within this zone. And what can you find? You see that sweet IPA that we analyzed. Look at, sorry, this is a fair value gap. You see this sweet fair value gap. Okay? This was a very sweet fair value gap. Price came here and closed it beautifully. Now, when price came here and closed this fair value gap, what are you expecting? 4 hours, you go to a 15 minutes to get entry. So on the 15 minutes, we are going to go to 15 minutes and now check out when price gave the entry. Price is going to give the entry during London session. Yes, price will give the entry during London session because GU, as I said earlier, is a London pair. So now price is back into my point of interest. Look at the move. High, low, high. Price gave us this low. Price gave this high. And price broke first break. And price came and swept liquidity again. So since price swept liquidity, I'll put this as my liquidity sweep. This is a back test tonight, so I'll give you opportunity to ask questions. So liquidity was taken and price came into the zone. Now that price came back into the zone after sweeping liquidity, I'll go to a 15 minutes or 5 minutes. 15 minutes or 5 minutes. Where is my sweep of liquidity? That was my sweep of liquidity. Now price came back to the zone. Price swept liquidity. You see all that beautiful liquidity that was swept. Price is back to my zone. So I'm looking for a 15 minutes break of structure here. That price swept liquidity. Now, 15 minutes, I told you, allow price to break 2 structural points. Let me say that again. When price come, allow price to break 2 structural points. Watch it. Price gave this high. I would love to, 1 minute, please. Let me remove, or let me change this. Let me change this background. Let me just change the color. Okay, let me just reduce it. I think it's clear enough. So let me zoom out. Look at where price is coming from: high, low. A lower high was created, a lower low was created. A lower high was created. A lower low was created. Price created this. Price created this. And price ran and broke this and broke this. So price came and gave us this first break, breaking two structural points. It broke here, 1. It broke here, 2. So when price broke this, there is definitely a fair value gap here that price came to. There is. If we go to 5 minutes, we'll see it. Okay? Price came to that week, the week before entry. We are going to find out when this entry, where price gave this entry. Okay? So I said our entry ought to be at London session, which is 2 a.m. So let's look for 2 a.m. 2 a.m. This 2 a.m. You can see that vertical line that is there. Should I increase it? Okay, I think it's visible enough. Yeah. Then 5 a.m. Let's look for 5 a.m. That's 5 a.m. Okay. So if I change this to Nigerian time, if I put it in Lagos, the time zone, automatically it will change. Look at it. It changed to 7 o'clock to 10. It's 7 o'clock. Look at it there to 10. So price should give me this model around that time. It is within this time I want to come to the chart. Look at it. Price gave this move. It was here. Price gave all of this break of structure. When did price give this entry? It was during 10 o'clock London session. That was the entry during London session. Look at that entry. So that was the entry. Took this stop loss here. Sorry, entry there, stop loss at the low. And first you want to take a 1 to 3, or you take the next high, which were all of these high, maybe all of these high. I would have taken this first high. And that was the 1 to 14, and price left. The next day, price has broken these structural points. Now price broke here. That's another break of structure. So what are you looking for? Any entry around here, any fair value gap, any IP around here. And there's clearly an IPA in that zone. That's an IPA. So we expect that price should come here in future. Did you see how price came back to it? Price came back to it. Now we need to find out when price came back to it. When is the time price came back to it? So let me pull out my vertical line and look for I'm looking for 7 a.m. now because I changed my time. Or let me take it back to New York, please, so that we just flow with the New York time. 7 a.m., 7 a.m., 7 a.m. 6, 7 a.m. Sorry, 2 a.m. now. 2 a.m., sorry. 2 a.m., 2 a.m. 1:45, 2 a.m., that's 2 a.m. And then to 5 a.m. 7, 5:30, 5:50, 5 a.m. Did you see the time price came? Price came within the time. That's what we call time and price. Price came in time. In time. So I have my entry on that IPA waiting for price. And you see price came here in time. Stop loss at this low. Now, if I don't want to play it like this, I'll go to a 3 minutes. In 3 minutes, you will see this entry. I don't know if I can get that detail now, but let's try. 3 minutes, you will see what price did at this zone. 3 minutes, let's see. I hope we get it. Beautiful. So I'm going to remove this so that the chart will be very clean. 3 minutes, you will see what price did on 3 minutes in time. So let's first of all go and check this one. Let me remove all of this now. All of this. Okay, 3 minutes. So I'll have to bring back the 2 a.m. 1:30, 2 a.m. All right, that's 2 a.m. So look at 3 minutes. What price did 3 minutes? within this zone. Look at here and here. What can you find? You see, price gave you this high, price gave this low, price gave this high, price gave this low. Price what? Broke above. Two structural points. Broke here, one, broke here, two. What do we call that? A break in market structure. So immediately price broke this. It happened inside your time zone. Look at the time. 2 a.m. down to 5 a.m. Price came back exactly 5 a.m. to come and give you that entry. So price came back. Now what do? You are looking at the wick. Remember, we taught you the wick created before the break in market structure. This video, I don't know, I would have really loved to post it in my YouTube channel, but the value in it, I'm not going to post it. I'm going to send it only to the library. So now you are looking at this week as your entry. We have taught you week for entry. And that was the entry. 3 minutes. Price went, gave you maybe a 1 to something, came back to the same zone. This is outside session. You are not threatening. This is your stop loss at this low. 3 minutes. You got that entry. Price came back. This was news. Did news violate your entry? No, sir. News never violated your entry. It didn't. Because it's not meant to violate your entry. Now, let's look at the next entry and look at the 3 minutes. Okay, that was the next entry. So let's go to 3 minutes. I think I have to remove. This was it. This was 2 a.m. to 5 a.m. If you, let me zoom it out, you will see price was coming lower. And look at what price did. Price gave you all of this. High, low, and price broke structure here. That's the break of structure. And price came back. Click on the week before entry. That was the week created. That was the entry. Price made sure it gave you that entry within the time. You didn't see that one. Price now went and broke above all of this. Gave you all of this break. And when price gave you that break, you can see a clear fair value gap. It's still within your time. So why didn't you take this one? Fair value gap was created for you to have an entry. Just play the fair value gap. And that was the entry. Still happening within the London session. That is the beauty of currency. That's the beauty of currency. Price gives you the window of opportunity in time. Those that are not on this call, I really cannot tell why. I just hope they don't regret missing this call. So first, you want to take profit here. That should be 1 to 3. Only this move was a 1 to 5. You know what that means? 1 to 5. You know what that means? So let's go back to 15 minutes now. So second entry. Second entry. Since I know we are bullish, let me look for another 2 a.m. to, we're back testing. So let's take it cool. 2 a.m. to 5 a.m. This is 2 a.m. and then to 5 a.m. 2 a.m. to 5 a.m. Boom. I'll go to 3 minutes. I'll come back to 15 minutes, okay? All right, this was it. This was it. This was it. You see, price was making all of this move, gave this break of structure outside time. Outside, this was a break of structure, but it's outside time. Price got entry. But look at this beautiful break of structure here. You see how price came lower, swept this low, and broke above this high. So I know I would have missed this entry. I would have wanted price to come to the week, which price never came. Price didn't give us that week entry, but that would have been the entry. I would have had all this beautiful move. Like, that would have been a massive move. The price didn't give it to us. But this play was still in time, and that's a 1 to 3. Yeah, 1 to 3. Price didn't give that to us. a 1 to 3. Then let's go to 15 minutes. Let's see the next entry. We missed that entry. We didn't get it. Now, price closed above here. Is that not so? We are trading structure. Price has closed above here. So we look for any other information down here. And what information can you see down here? That's a fair value gap down here. So my fair value gap is here. And my fair value gap extends to this zone. That's the fair value. I want price to come back there. You see, price came, didn't touch the fair value gap. But I'm going to check in time. Okay, price data came back and filled it. Yeah, price came and filled it. Now, I want to show you this entry. So first, let me look for 2 a.m. Look for 2 a.m. 2 a.m. That was 2 a.m. to 5 a.m. Okay, I think this entry was outside time. This entry was outside time, but it came into the IPA, which by structure, you should have been expecting price to come back there. Now, price gave us this low, created this high, price came back, retested. What we expect now is that price should give us a higher high. And you see, price ran away beautifully, like mad. Did price give us another entry? We are bullish. So let me look for 2 a.m. 2 a.m. This 2 a.m. So 5 a.m. I'm waiting for price around this zone. $5 a.m. coming. Bear with me. Let's go to 3 minutes. Let's see if we got a play here. Okay, that's the last zone. Let's see 3 minutes if we got a play here. Within time, like in time. Is that play not clear? Is it not clean? In time. Look at price created this break of structure here. In time. In time. Price gave us that break of structure there in time. Break of structure. And price came in to fill it. So since you have a break of structure, you have IPA, what do? You set your limit there and wait for price to come. Price activated outside time, but gave you the formation in time, gave you the signature within time. Are you getting now? Price ran away. Price gave a very massive move, like massive move. That's almost a 1 to 9. Then let's see the next day, which was on a Thursday. I'm looking for 2 a.m. 2 a.m. 2 a.m. 2 a.m. 2 a.m. 2 a.m. Please bear with me. Okay. There was no, I think that was weekend. This was Thursday. Thursday. No 2 a.m. around here. Let's see the next 2 a.m. Okay, just hold on. Hold on. Hold on. Looking for 2 a.m. Okay, this was 1. This was 2. All right. Yeah, somewhere here. So 5. Okay. So that was 2 a.m. to 5 a.m. Let's see. In time, price really didn't give any clean break of structure in time. But if you had played 15 minutes structure now, because you see, we are not playing anything outside structure. Structurally, a low, a high. Price came here, just to this last block. All of this push, that's where price came back to. Possibly, I wouldn't have seen this too. And price ran away. You may not always catch all the moves, but if you are playing in time, you are sure to catch more of the moves. Like, you are sure to catch more of the moves. You are very, very likely. You are most likely. All right, I think that's the right word. You are most likely going to catch all of the moves, or most of the moves. So give me a few minutes. Let me clean my chart. Let me clean my chart. A few minutes. Let me clean my chart up. So I think it was on a Friday. Price gave us all of these massive push up. Like Morris, I think Morris caught this move from here, like back to back. Now that price has given me a push to this zone, I expect that price should come and take out all of these highs. That's what I expect. So if I want to look for another entry, I want to look for price to possibly trade back into maybe 50% of this candle, and we just keep pushing high. I don't expect price to come to all of these lows because price is respecting the break of structure to move higher. So price will just push back. This way, I'm not going to start looking for candle entries. Mark out the low, I mark out the high. Then Morris, you were saying I should show you how to do session break. Just click on this calendar that is here, this calendar below. Just right click, you will see session break. You click on session break, it will show you when each of the session open. So that's opening price. That's opening price. So you cannot begin to use that. So this is my low, this is the high. So I expect that price should come to maybe this IPA or this IPA here, because this is the greatest IPA I can see here right now. If price come to all of this zone, and then we just keep buying. That's what I'm seeing. I just want to keep adding position to go higher. Now, if you want to combine your opening price, so if you go through the videos, you see a lot of things I've taught. Price opens. Anytime price is open, if price is going to buy, price will first of all sell. You can see that. Look at here now, when price open. Because we are going to have a bullish day, price open. First of all, sold down and price bought. Because we're going to have a bullish day, price open, sold down first and price bought. Look at where price closed. So between where price open and here and where price open to this side, you know that price actually bought. Now price open, price first of all came lower and price closed here, but price rallied up. Price opened, came lower first, and price sprung higher. So you'd have been able to catch all of this move. Look at that day. Price swept this, came back to this IPA. That would have been a beautiful entry. But if it's in time, fine. If it's not in time, I can just leave it. I'm not saying that you cannot get GBP entry during the New York session. No. I only said GBP is a London pair. So most of the window of opportunity is presented during the London hours, during the London session. Because this entry now was a New York entry. Yes, this entry was a New York entry. That's around 7 to 10. See, that was around 7 to 10. That was this entry. This is a New York entry. Okay. So I think we're just going to backtest others maybe next time so that you go and digest this and then begin to fly. So EU is a New York session. That's why most entries, you will get them during the New York time. And that's around Nigerian period from 1 p.m. to 5 p.m. Nigerian time, 1 p.m. to 5 p.m. Why it is like 7 a.m. to 10 a.m. London time. All right, so let me unmute you guys so that you can ask questions. I'll take just 2 questions and then I'll stop the video so that it will not be too lengthy for others and be watching much later. So You can unmute if you have question. If you don't have question, you have contribution or what you observed while trading and you want to share with us, just go ahead. Mr. Alex, good to see you. Lucia, I've missed you. Welcome. Good to see you. Good to have you on the call. Time for question. I've unmuted you guys. Any question?
Good evening, everybody.
Good evening, Mr. Benga. Welcome.
Yeah, thank you very much. So I don't have a question. I just want to say thank you for letting me join this community. And I just want to quickly say that it was a very good top-down analysis that I observed here, which is very, very nice. And especially the sessions also is very, very important. So I think that's something I'll definitely add more to my knowledge. The session is very, very important. So thank you very, very much, sir.
All right, thank you, bro. Thanks.
Yes.
If nobody's speaking, I'm going to end the call. I've said so much, so you can't be quiet, guys. I've said so much. Maybe I'll just
okay. To me,
end the video.
The session, I'm almost catching everything about the sessions.
Okay.
But I was failing on structure, but now I can see since Friday I've improved a lot. And I'll just keep on looking on the charts and trying to trade the sessions, but right on time. That's what I can say.
Is that right?
Yeah. Thanks a lot.
It's okay. All right.
So,
yeah, go ahead.
When you entered, when you present entry point on time, just like you said, now discover that their own time end by 2, it is set by 10 a.m. Nigeria time. Then what are the remaining other time from 10, 11, 12, and so on?
No, Nigerian time, this is how it works. Currently, because of the change of time zone, instead of -4, we now have -5. So our London session now, Nigerian time, starts by 8 a.m. 8, 9, 10, 11. So between 12 o'clock, 11 and 12 o'clock, it's launch. We call it London launch. There's no much volatility in the market.
Okay.
All right. It's London launch. Then from 1 p.m., the New York time begins from 1 p.m. to 5 p.m. It can extend to 6 p.m. All right. It can extend to 6 p.m. But most times, price will give you the model within that time. Maybe it can now give you entry. It can give you the break of structure between 1 p.m. and 4 p.m. or 1 p.m. and 5 p.m. So once you see that break of structure on a much lower time frame, just set your limit. Price can come there 6 o'clock and start going its direction. But often than not, price gives you that model within the time. So we have London session in the morning from 8 a.m. to around 11. Then we have London launch. Then we have the New York session, which starts by 1 p.m. Nigerian time. I'm talking of Nigerian time now. 1 p.m. and extends to 5 p.m. Then for those that trade indices like NAS 100, what are these other US 30, US 100, and
US 30,
all these
US
indices,
yeah,
their own begin around 3 p.m. New York time. That's Nigerian 3 p.m. Their New York session is 3 p.m. Why for Forex currencies like GBPUSD and all these other London and New York pairs, they begin by 1 p.m. My explanation clear?
Yes, sir.
So during London launch, it's not that you can't get an entry, but the volatility is not there.
Okay.
So that's why currency is better. You don't need to stick to your system like synthetic all the time. You can just come within the period where you are expecting that window of opportunity. Look for your model. Once you see your model, set your limit, allow price to run. You get now?
Okay. Yes, sir.
I think I've answered that question very well. So one more
Yes, sir.
question.
Very well, sir.
Like I said, your skill is when you now go back and backtest it. So I've backtested GBP USD now. You go back and backtest GBP NZD or GBP JPY or GBP AUD or GBP
Okay, sir.
CAD. Yes, GBP Czech, GBP Swiss, all of them. Just go back, backtest it. That's when it becomes a skill. You now trust your analysis. If you see it, you know that you have seen it because you have backtested it. So that's how it works.
Hello,
Okay,
sir.
sir.
Yes,
Yeah, go
Coach,
ahead.
just to add on what you have said, and the model should happen on a point of interest on maybe 15 minutes or 1 hour.
God bless you. Yes, sir. Yes, sir. Yes, sir.
Okay.
Yes,
It's
sir.
a mistake I've been making since I started the sessions, but since last week I've changed a lot.
Okay. Yeah, you're really catching up on currency. I'm proud of you. Catching up on currency. I'm proud of you. OG Best, you wanted to say something?
Yeah. Good evening, sir.
Good evening.
Yeah. Basically, I understand the time zones they are given based on EU and GU, based on Nigerian time. My question is now on Asian session. What time is that Asian session? Because sometimes ago, we were like teaching us Asian high, Asian low, how to get a trade bias on Asian high and Asian low. So now with
Yeah,
the
it
time,
doesn't with the
okay,
time zone. All right, let me on my Asian session. Okay, let me put on my Asian session. You will see what price 99%. This green phase, I think this color is green. Yeah, maybe. So you see Asian session, it's around 19:00 New York time. So 12 to 000 New York time. That's Asian session. 19:00 to 000. Okay? From 19:00 to 000. Now, how do you combine all these things? Let's go back to some of the entries we saw before. You're going to find out that price will always take out either a Shan high or a Shan low. Now, this entry that is here, that happened in time, this entry happened around, I think, New York. This happened around New York session. Let me look for, this happened New York session. Okay, this happened, I'm looking for, let me go back to 15 minutes first, please. Okay. Okay. At this 15 minutes. You see, all this entry that happened here, what do you do? What do you see? Price took the lows first. Price created the structure and took it out. Price will always take Asian because Asian is liquidity. Except if it's an Asian pair. Price created this, took out Asian lows, and then we bought up. When price came back and gave us this entry around 7 o'clock to 9 o'clock, price still took the lows. When price gave this entry around that 2 to 5, price took these lows. Why is price taking the lows before the highs? Because price is bullish. But look at here, price took the high. But you have to wait for price to take the low since we are bullish, and then you buy. Okay? Now look at this place. Price created the low. Price took the high first and gave a massive push up. So you'd have been able to sell this. Because price took the high, left the low. So I would have sold this. I think we got this now. I can't remember, but I know we got one of these sell. And this happened, I think, during New York session. Yes, price gave this sell during New York session. And price came to take the low. So all the time, not most of the time, all the time, price will take Asian liquidity out before price will buy. Look at this one. Price took this whole low, gave this model, and price came back in. Price came here. Price ensured to take the low first before price bought. Price will always take Asian out. Like always. But look at here. Asian was standing. Price didn't take Asian session. Now go to 3 minutes. Let's see whether there was an entry here. Because this was in time. Look at around 2 to 5. This was in time. You see, there was no clear entry. But if price had taken this low, this entry would have been sweet. So I know many persons will miss this entry. Except if you are trading ICT. What ICT teaches is that once there is this break, look at this break. Whether price take Asian high or low, look at price broke 2 structural points, just play this fair value gap. Or you play this candle that is here, which becomes your breaker block. I've taught us that. For many a time, price will take lows. That's what really gives us the confirmation. So people like us that trade smart money will miss this kind of trade because we expect price to take low. But this is happening within our time. Why shouldn't you still take it? It happened within your time. Why shouldn't you get in? Why? So everything just moved together, okay? Everything moved together. Guys, I need to end this call. Go and backtest, and I'll see you.